Hey guys, how's it going? It's Andy from GOOGL Investing. Happy Friday. In the past couple of videos, I've been getting a little bit of flack talking about some speculative stocks or some things that people think may be a little bit too risky for me. And in the past, I have been talking about some more risky stocks, stuff like Sonos, JP Morgan Chase, Southwest, and stuff like that. So today I'm going to give the people what they want. I am a man of the people. So today we're going to be talking about the three most important stocks on the overall stock market. And you might see that and be like, what does that even mean? Today we're going to be talking about the three highest weighted companies on the stock market. These are the three giants that move the market the most. When you look at the overall market, not all stocks are kind of favored the same way. If you have a company like Zynga that beat earnings and was up around 5%, the market just kind of looks at it and goes, that's cool. But then if you have a giant like the three stocks we're talking about today with Microsoft, Amazon, and Apple, if they go up 5%, it brings the whole market with it. So today we're going to be talking about those three stocks, these three massive blue chip companies. Going to be talking about the recent earnings reports because these were the main earnings that I was watching going forward to see the direction of the overall market. And then I'm going to talk about where I think they'll be by the end of this year. Before getting started, I do have to say that I'm not a licensed financial advisor and this is not financial advice. Anything you hear in this video is just me giving my own opinions on these three stocks, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. With that being said, let's get started and talk about the three most important stocks on the stock market. So I decided to go by the most important by market cap and go slowly down. I wanted to do the stocks that had a $1 trillion valuation, and I forgot that Google recently hit that mark, but I'm not going to be talking about them in today's video. I'll probably make their own video specifically about Google. But the highest market cap stock is going to be Apple, ticker symbol AAPL. And so Apple has been really on a tear recently. Currently the stock is trading for $456 and it's up a whopping 55% year to date. Recently Apple was in the news because they announced that they're going to be doing a 1-to-4 stock split. Meaning that if you own one share of Apple at the current price, you're going to be a proud owner of 4 shares when they split and divide the current stock price divided by 4. They haven't done this in a while, and it's really up to the company when they decide they want to make the split happen. You have some stocks that like to be pretty low priced, and then you have some like Berkshire Hathaway that has never done it, and it's reflected in the incredibly high stock price overall. So Apple decided to do this, and it's not really going to impact the direction of the stock, but it was being talked about a lot pretty recently. And so from the last earnings report that came out towards the end of July, the stock has been on a crazy tear. The stock was up 6% after the earnings report, and it's been on the best 7-day tear since around 2009. And so before the earnings report, the stock was below $400, and now, as I mentioned, it's currently above $450. So it has recently been killing it and has gone up significantly in the past couple weeks. And so the reasoning behind that incredible jump in price comes from the last earnings report. Pretty much you can say that about a lot of stocks recently. And so their revenue had an 11% increase when analysts actually expected a drop of 2% overall. And when you have a company as large as Apple, where the market thinks that revenue is going to fall and it beats it by double digits, it's going to push it up significantly. Their earnings per share was up 18% year over year, which is very impressive. And they had a surprise increase in their iPhone sales overall. This was even as the pandemic has been hitting, and they recently announced that their next generation of iPhones is going to be delayed as a result of some problems with their supply chain, mainly in China. And so going forward, it's really going to be interesting to see how Apple does going into this fall. They've said that they're going to be delaying the iPhone, and as I've mentioned on this channel before, the only real gripe that I have with Apple as a company is the fact that they rely so heavily on iPhone sales overall. When I put up this kind of jumbled graphic, the largest revenue source for around 50% of their total revenue has been the iPhone sales for a long time, and that kind of worries me, especially going into a potential recession. Actually, it is a recession at this point, and being in a pandemic. It was kind of a good thing to hear that they had surprise increases in their iPhone sales that they were not really expecting. So I am pretty hopeful going into this fall. I saw some really positive things from this last earnings report, specifically the 13% increase in their services overall. And so services are mainly their subscriptions, stuff like that, and that was very positive for me to see. As I've mentioned on companies like Adobe, I love companies that have very heavy reliance on subscriptions overall. And the fact that Apple is able to diversify the revenue sources, it's not a huge part of their revenue, nothing like the 50% that we're seeing from the iPhone, but that has been increasing. And I'm proud to say that I was part of the 10% revenue that came from wearables for the watch, as I bought this in the last quarter. And that's, as I mentioned, around 10% of their revenue. So the longer Apple has been around, the less reliant they've been on the iPhone overall, and I think they've kind of identified that as a goal going forward. And so Mac sales are always going to be important, but the iPhone is the top dog when it comes to the success of Apple, and it's going to be very interesting to see how it does going into this fall and winter. So going forward, what do I think about Apple? When it comes to a long-term investment, it's hard to argue about a better blue chip stock. When I put up the 5-year chart, it's solid, what can I say? At this current valuation, I don't think I'm going to be buying in. If the stock does fall in the next couple months, maybe if we see a massive pullback in the overall market, I will happily throw as much money as I can pretty much afford into Apple. This is a company that I love. It's a company that has shown incredible returns over the past decade plus. I think it could be an important part of anyone's investment portfolio going forward. So at this price, I'm not really interested. And as Jim Cramer always says when I see him talking about Apple on Twitter is, don't trade Apple, buy and own Apple. And so this is a stock that I think has a place in a long-term investment portfolio, and I'm just waiting for the right price to get in. Let me know what you think about Apple stock, ticker symbol AAPL, in the comment section down below. And so next up on this list by market cap is going to be Microsoft, ticker symbol MSFT. And their market cap is currently sitting around 1.6 trillion. Microsoft has been one of my favorite stocks of all time, and I'm proud to say that it is still a part of my portfolio, even after the last exodus when I sold a lot of my previous holdings. And so Microsoft has been a part of my portfolio for over a year, and I will intend to keep adding on to it in the future. And so Microsoft is currently trading for $256, and it's up 37% year to date. Microsoft has been talked about a lot recently with the news behind TikTok. If you haven't seen that, I don't know how. TikTok has been threatened to be banned in the US, and so Trump came out with an executive order saying that in 40 days, there's not going to be allowed to be transactions between Tencent, which is a massive Chinese company, and the parent company that owns TikTok. And so there's kind of a deadline for when the deal is going to have to be made between Microsoft and TikTok, assuming this actually goes through. I don't think this should be a huge reason why anyone should consider to buy Microsoft overall, but it'll be very interesting to see what happens with this deal overall. There's a lot of political turmoil going on in this deal overall, and it's going to be very interesting to see if it actually goes through. Looking at macro trends, the company has $136 million in cash on hand, and it'll be very interesting to see what the total cost for this transaction could possibly be. So when I've talked about Apple, I've talked about the reason why I don't love the heavy reliance on iPhone sales overall. When it comes to Microsoft, that's not the case. The reason I've loved Microsoft for so long is their 3 revenue sources are split up pretty evenly into thirds. And so they don't rely on one revenue source overall. In the past couple quarters, there were some worries about maybe a drop in computer sales, but that was just boosted off the fact that they had better than expected cloud services. So when one of their businesses kind of slacks during the pandemic, the other side of it kind of picked them up. So I'm not worried about them at all going forward. And I thought this was going to be the first company that was kind of going to tick the stock market down a little bit after their poor earnings report. And so they beat expectations on revenue, but they had poor outlook for their earnings growth. And so they did see a 7% increase in their earnings, but it was the smallest increase that the company has seen in the past 8 quarters. And so the market did not like that and pushed them down after hours. And so overall, Microsoft is a fantastic company. They have a very nice balance of revenue sources. They've been pretty aggressive in their acquisitions over the past, not as aggressive like the third company that we're going to be talking about in this video, but they've bought companies like the hardware for Nokia, they've bought Skype, and then LinkedIn recently. And they have a nice diversity of products overall, and I think it's a great position to have in pretty much any long-term portfolio. And so right now, I would be happy to buy Microsoft if I had to. If someone gave me money right now and said I had to invest it in a blue chip, it'd probably be going to Microsoft. I don't think it's as extended as something like an Apple, but I would happily wait until the market falls to buy it at a better price. It is currently a part of my portfolio right now, and I don't feel the need to add to it at the current price. I'm already up around 30%, and I'm going to wait for the market to kind of show what direction it's going to go in the near future. So let me know what you think about Microsoft, ticker symbol MSFT, in the comment section down below. And so the smallest of these giants is going to be Amazon, ticker symbol AMZN. That's kind of a tough one to say, and I don't really talk about Amazon a lot on this channel. And so currently the evil empire is trading for north of $3,200, and it's up a whopping 74% in 2020. And so at this point, it seems like Amazon is in almost every sector that you could possibly want to be a part of. And so I wanted to take a look at the $74 billion in revenue that they had in the last quarter and kind of talk about the breakdown from where they came from. And so one of the most exciting parts about Amazon's business model has been the AWS, or the Amazon Web Services. And so they've seen some incredible increases in revenue over the past couple quarters. At this point, it brings in a whopping $10 billion of revenue. And this was the area that saw incredible increases during the pandemic. And as of right now, it makes up around 13% of the company's revenue, which I thought was much higher than I actually predicted. Next up, they saw a 28% increase in subscriptions, and they made up around $5.5 billion overall. And then North American sales were up like 30% overall with $49 billion in revenue, and then international sales was around 19. And those are just some crazy numbers. When you compare them to the revenue of a lot of these tech companies that you find in the NASDAQ, yeah, just the North American sales would probably outpace most companies overall. The billions of dollars that they bring in is just so ridiculous to think about. And so overall, Amazon is just so efficient in everything they do. One of the news stories that I was watching last year was the breakup between FedEx and Amazon. FedEx was the shipping partner for Amazon, and now they've kind of broken away from that and they're doing their own thing. And at this point, I've kind of noticed it. Amazon products are no longer being delivered by FedEx, UPS, that type of stuff. They're being delivered specifically from Amazon. And so I looked to see some of the numbers that were coming from that, and every article I saw was them doubling down and buying so many more new vans. I found orders of 100,000. I saw stuff where they're buying only electric cars or doing autonomous cars. And so they're really upgrading their fleet overall. And then I found an order that they bought 12 more cargo planes to add to their fleet. And by the end of next year, they're going to have 80 total massive cargo planes. And so the Amazon empire, which is why I call them the evil empire, just because it spans so far and they're a part of pretty much anything, is so massive at this point. And it's incredible to see them continue to expand. Every year, it seems like they're going to hit a wall where they can't possibly go any bigger, and they continue to do so. So overall, how do I feel about Amazon? Well, it's hard to argue about the success that the company has had. They keep beating expectations in pretty much everything, and they continue to expand overall. When I show the 5-year chart, yeah, they've only gone up 500% in the past 5 years. And so while personally, I don't think I'm ever going to want to own Amazon, it's just not something I want to have in my portfolio. It's hard to argue about the overall success that the company has had. And it's going to be very interesting to see how the company does going into this next recession. They've shown that they can do incredibly well during the pandemic and just how flexible the company can be overall. And so you might not agree with Amazon, the way the company is being run, but it's hard to argue with the success that you've seen with the money that they're bringing in and the success of the stock overall. So let me know what you think about Amazon in the comment section down below. So today I wanted to talk about the 3 blue chip stocks that move the market the most. And so I don't know if everyone understands how the Dow and the NASDAQ move overall. It's not just one stock is evenly weighted. It's mainly based off of market cap. And so these massive stocks, the top stocks in the NASDAQ, I believe it's the top 5, make up 25% of the overall weighting of the NASDAQ. And so these market movers, as they're called, if you have some news events behind them, that's how the market moves significantly. And so that's why I was kind of expecting the market to fall. If any one of these massive tech giants had some bad news, I expected the overall market to fall with it. But you know what, that didn't happen. I'm very bullish overall, and I'm very curious to see what you guys have to say about these 3 top stocks in the comment section down below. Thanks for watching. I appreciate all the support, and I will see you on Monday.